Thailand is in the process of changing their income taxes, not dramatically, but it's enough to where if you're a high net worth person, you might want to consider another place. And I'm going to give you some options here. There is an amendment to overseas the income tax. It must be factored into your personal income tax, especially if you're a high net worth person. And there was an article that came out in the Bangkok Post on this, but the Revenue Department recently amended its notification regarding taxation on specific foreign source income by stipulating that local residents who earn overseas income will be subject to personal income tax, also called the PIT, according to the paragraph 2, section 41 of the Revenue Code. Now, for now on, people who have earned overseas income either from their occupation or doing business abroad or from wealth that's located abroad but has been exempted from PIT for nearly 40 years must factor this into their PIT for this year or for the year that's coming up. Now, why is the government, opting to collect tax on foreign source income as it has been exempted for a long period of time? There's a lot of pressure from OECD. It went on in the article, the Department Deputy Director General and Spokesman Vinit Vesapun said that the tax collection is to comply with international standards on the exchange of financial information to promote tax transparency and fairness. In other words, whether income is earned within the country or abroad, one must pay tax. Now, why was such tax exempted in the past? Well, in fact, the department has never exempted the collection of PIT for income accrued offshore. The previous rule, which was drafted 40 years ago, allowed for foreigners or residents with foreign income to be taxed only if it's brought into Thailand in the year in which the income was received. However, the income will be exempted from tax if it is brought into Thailand in the following year. For example, in the case of overseas earned income on December the 31st, but remitted to Thailand on January the 1st the following year, there is no need to pay the PIT to the Revenue Department. So basically, the big question is, why has the department issued such a rule on tax collection, as it could create a loophole for tax evasion, which is a bunch of bull. I mean, it's, there are ways you can get your taxes to zero and not be tax evading. This is mainly due to limitations in the past, namely the double taxation agreement that was used by only a few countries. Therefore, if the government collected tax on income from abroad, the taxpayer would be subject to double taxation, as tax must be paid to Thailand as well as paid to the country in which the income is being earned. Now, however, Thailand currently has 61 double tax agreements which prevent individuals or companies operating in more than one country being taxed twice on the same income. Now, in addition, in the past, there were limitations on tools and technology for checking the timing and amount of income remitted to the country, while now there is technology to monitor the outward and inward movements of money, as well as international data exchange agreements, which enable tax authorities to effectively utilize information for efficient tax administration. Now, furthermore, tax collection from overseas income was so trivial due to restricted environmental conditions in the past, namely low technological development, which impeded individuals' ability to invest or work abroad. Despite technological progress at present, people who have been keen to invest or work abroad are limited to those who have had good economic status and good knowledge and expertise. More importantly, in the past, one of the main incomes of Thailand was from laborers who worked abroad and sent money back to the country. Therefore, the government does not want to create a burden for these workers. Therefore, the interpretation of paragraph 2 of section 41 of the Revenue Code is deemed to limit the power of the Revenue Department. Now, it's noteworthy that in section 41 stipulates that an individual Thai citizen or foreigner who lives in Thailand for one or more periods totaling at least 180 days in any tax calendar year is, for tax purposes, deemed a resident of Thailand and subject to tax on all accessible income according to the section 40, which indicates types of income subject to tax derived from sources within the country, whether paid within or outside Thailand, on accessible income derived from foreign sources to the extent that it is brought into Thailand in a year in which the income is received. Now, the collection of PIT on overseas income will be primarily based on the principle of self-declaration in conjunction with the use of digital technology and international information exchange systems for verification. Now, Another question that comes up is, when will the new rule take effect? Well, the program will begin January 1st, 2024, and apply only to tax residents in Thailand, meaning that tourists and short-term workers will be exempt. Also exempt will be those who have been taxed in a foreign country that has a standing double taxation agreement with Thailand. Now, however, the department will need to work out more details, such as the planning for the tax credit system in the case of a prior double tax agreement with the source country. Now, during the transition period before the enforcement of the new rule, the Revenue Department will invite all stakeholders to discuss in detail any problems encountered, as the department needs to issue many subsequent regulations or laws to support such an initiative. And Mr. Vinet also added that the revision of the PIT collection will help enhance Thailand's international standing as a member of the many bilateral, multilateral agreements, promote fairness in tax collection, both from domestic and foreign sources, as well as ensure transparency in tax practices. I totally disagree with him on that, because I don't think it's what they should be doing is going back to these OECD countries that's putting pressure on Thailand, saying, look, y'all need to be more competitive in your taxes. If you're not willing to lower your taxes, you're just going to lose a lot of business. And foreign workers will come here. But they're not doing that. It sounds like they're caving in. And if you've got a lot of assets, I would strongly advise you just visit Thailand. Don't go move there. The program is really not a non-dom system, although it sounds like it's similar to a non-dom, although they don't have to declare domicile status like you do in Cyprus, Malta, UK, and also Ireland. But my whole thing is it's very difficult to get this passport. You're going to have to relinquish all your other passports to get it. You're going to have to pass a Thai test. And to me, it doesn't make sense if you're going to be wanting another passport and you're wanting to go to a place that has somewhat of a similar non-dom program. I would pick those other 4 countries that I mentioned to you. And you'll get the passport. It's an English-speaking country. In fact, if you really want to get around from any sort of taxes being brought into or money being brought into the country and being taxed on it, pick a territorial tax country. There are a lot of countries that are not caving in. All of them are, you got tons of them in Central America, except for Mexico. You've got Ecuador, which is another good one in South America. Or pick up your tax haven status, which is even better, like St. Kitts. St. Kitts doesn't care if you bring hordes of money in the country. They don't tax you on it. In fact, they want you to bring a lot of money in and invest it in St. Kitts. They're not going to tax you for bringing it in. You're always going to have countries that won't cave in. And it looks like this is one of them that is caving in. My advice is pick another country. If you want to know more other countries that have real good tax systems, go to our website, www.citizenshipquickly.com, and just ask for some help. And I would like to hear from you. If you got a question or comment, just put it below. And don't forget to hit the subscribe button on the right of your screen right here. You'll get new videos automatically as they come out. And I look forward to talking to you on the next video. Take care.